JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 22nd of June 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yes, feel free to check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I'm going to pick up here is Nikkei 225, and yep, we are seeing a nice push here to the upside, and of course we are coming back from the lows here, from this low that we hit on Friday. I mean, we saw the market ending heavily in the red for the week, but yesterday a nice reversal happened. Sorry, not yesterday. Yesterday the decline happened, but yep, as you can see, it managed to recover now. So basically, last week we've ended in the red here in general, but yesterday we continued the slide. However, everything turned around, and the market now is in anticipation of the Jerome Powell's testimony today later on, so during the U.S. session. So keep that in mind. The markets might get a little bit volatile. So and yep, you can see that here we are getting a nice reversal here. We're recovering, if I'm not mistaken, most of the losses. Yep, we've recovered all the losses, and now we're trading comfortably in the positive territory for this week. So, in terms of going further here, so yes, of course, I'm still keeping an eye on this barrier right here, the 29,519 zone. But of course, what you should keep an eye on as well are some of these downside lines here. Now, some of them are a little bit tentative, but nevertheless, yep, keep your eyes on it, and that's the reason why I have my barrier here for the upside only from here, from this level, because this level acted as a good area of support and resistance. So yep, and if we clear this one, this would confirm a forthcoming higher high, and potentially more buyers could join in. So that's why for now, long story short, guys, we will stay positive somewhat, but again, it could be a little bit difficult around here. If this area provides resistance once again, then once again we could see a nice decline here. So again, keep that in mind, and let's see how today is going to play out and how this week is going to play out. For now, like I said, from the very, very short term perspective, I'm aiming for the upside, but we'll be very careful around here. Now jumping into Shanghai Composite here. So yep, the Shanghai Composite, it did also push to the upside today. Not of course as much as Nikkei. Well, Nikkei jumped almost 10 times more than that, so than Shanghai Composite. So the Shanghai Composite is slightly on the modest side here. You can see that this level, the one that I talked about previously as a support level, this 3,562 territory, did act as a nice area of resistance this time. So previously it acted as a good area of support, now resistance. So if we climb above it, then my next target, of course, will be this this barrier right here around the 3,626 zone, and then of course we'll take it from there. For the downside, what I need here is probably a drop below the last week's low near the 3,503 zone, and this way, yep, potentially more sellers could join in, and we could see the we could see the index going for a bit of a larger correction here to the downside. So keep that in mind. So yeah, guys, I mean, for now, I mean, like I said, it's an interesting situation here. I doubt that this, we still have around 50 minutes left of trading, so I doubt that it will push above this area. However, anything can happen, but it might stay somewhere around here, and this is maybe what we'll leave for the next trading session, this barrier right here, this 3,562 zone. Now jumping into the German index, DAX, and yeah, so we had a nice recovery yesterday. It climbed higher. We pushed towards that 21-day EMA, where the index kind of, I wouldn't say found resistance here, it overcame it and stayed above it. So if we take a look at the cash index right now, we'll see that the price is actually trading not far from there, but it's trading around 15,635 zone. So basically not far from this barrier, this hurdle, the one that I talked about previously. So I previously looked at it as a support zone. Now, to be honest, probably I need to relook at all this. And some levels need to go probably, but let me just probably reuse some of these lines here. So for the upside, what I would like to see here is, well, I would like to see that push back above the 15,638 zone right here. I would like to see the daily candle staying above that area, and if it stays, then there is a chance for a move higher. However, we do have this little short-term tentative resistance line here, taken from the high of the 15th of June. So in a way, one should remain careful, because even if we push a little bit further north here, if the index struggles to overcome this downside line, then basically another slide could be possible. So this could be a bit of a teaser here for the bulls, because if the index is not able to overcome this downside line, then probably maybe we're not really ready for that move higher. So in a way, what I can say right now is that for the upside, what I would like to see here is maybe actually a push somewhere above this 15,732 territory, just to be a little bit more on the safe side. And then, yes, we could start aiming for that all-time high near the 15,803 zone, 802 and 3 approximately right there. But if that gets cleared, of course, this would place the index into uncharted territory and higher levels could be met. But at the moment, guys, be very careful. Yes, there is a chance for a move higher. However, be very careful near this downside line, and yep, keep your eyes on some of these levels. For the downside, well, to get comfortable with lower areas, probably a drop below the current lowest point of this week near the 15,309 zone could do the trick here for more sellers. But of course, don't get me wrong, I do understand that we might be missing out here on a bit of territory. So maybe, just maybe, I'll have a look at this level right here, the area near the 15,505 zone. So if we drop below it, then yes, we could maybe this could potentially lead to some lower areas. Nasdaq 100. Now, yesterday also a nice beautiful recovery. As you can see, we came back above this upside line taken from the low the 19th of May, and initially we dropped below it. Last week we saw a few kind of flirts here with this upside line, but eventually it kind of got respected still. And yesterday we saw that climb back up, and now we're kind of coming again closer to that all-time high. We're not there yet. We're currently looking at the cash index. We're currently trading at around, let me just quickly double check that, around 14,135 zone. So basically not far from where it closed yesterday. Now let me just adjust actually a few levels here because it's getting a bit messy. So this is the low that I'm going to keep an eye on. This is the other low, and for the upside, what I need here is basically, it's going to be a pretty straightforward approach here. For the upside, I need to see the price staying above this upside line. If it continues to trade above it, then yes, there is a good chance for this one to drift higher, potentially aiming for that all-time high near the 14,205 zone, or a nice good break above it. Yep, would confirm a forthcoming higher high, guys, and would place the index into uncharted territory. Now, in terms of the downside, certainly we'll start looking at lower levels if we get a drop below the current lowest point of this week, which is around the 13,968 territory right here. But of course, then we'll need to be very careful near this 21-day EMA here, which also coincides right now with the low of the 16th of June, and that's around the 13,843 zone. And of course, yep, if that gets cleared, then further declines are possible. I mean, further declines, by further declines, I mean a larger correction to the downside. But at the moment, long story short, we will, like I said, keep an eye on this upside line right here, and as long as the index continues to trade above it, then we'll aim higher. DXY, the dollar index, so yesterday drifted to the downside, but in a way, somebody might say maybe this was just part of a nice little correction before another possible move higher. Certainly, we will be very careful today as well. Like I said, the Jerome Powell's testimony is coming up, so that might kind of weigh in here on the US dollar. And for now, yes, for now everything's looking on more on the positive side, towards the positive side, because we are still trading above the 200-day EMA. But if we fall below this 200-day EMA and fall below the 91.81 zone, approximately around here, then yes, maybe we could go for a bit of a larger correction here to the downside, because don't get me wrong, there is still a chance for this one to move higher, especially if it continues to trade above this long-term downside resistance line taken from the high of the 23rd of March of last year, of course. Now, again, the moment, like I said, keep your eyes on the 200-day EMA. Don't get me wrong. I mean, at this point in time, if I want to go for the upside, I would probably wait for a nice good push above this 92.33 territory. If we clear that, then yes, higher levels could be met. But if we don't, then maybe a bit of a corrective move, like I said, lower could be possible. However, I will consider that if we get it, like I said, a drop below this 91.81 zone. Now, jumping into gold, and yeah, gold did push higher. It did make its way north here yesterday, but I'm still sticking to this idea that we might see a push higher here. We may see maybe a test of this 200-day EMA or the area near that, and if this area provides good resistance, another slide here could be possible towards this upside support line taken from the low of the 20th of May of 2019, guys. So yep, for now, long story short, basically keep your eyes, of course, on DXY. And if that suddenly starts reversing south here, then yep, we might see gold pushing a little bit higher. And like I said, yep, aiming for that 200-day EMA. Jumping into WTI oil here. So WTI oil enjoyed the weaker dollar yesterday, as you can see. Yep, it pushed higher and it managed to overcome and stay above the 72.68 zone, or in a way we can round it up here a little bit to 72.70 zone. It stayed above it. Now the big question here is, can it go higher? And of course, I mean, last week I talked a lot about this upside support line taken from the low of the 27th of May, which also did its job and did provide a good hold up here, although we had a few false breakouts, but nevertheless it did its, like I said, it did its job, and it helped the bulls come back into the game here. Now, looking at this, I mean, previously I talked about this level right here, the 76.88, or we can round it up here a little bit, the 76.90 territory, marked by the highest point of October of 2018. If I'm not mistaken, that it is also the highest point of 2018. And as you can see how quickly, in a way, we have traveled to this area here, to these highs. It took us a while to get lower here, but to get back up, it kind of after reversing here in April, at the end of April and last year, the commodity has moved higher nicely here. So for now, I'm kind of, as I would say like this, that as long as the price remains above that 72.70 zone, yes, I'm going to continue targeting the upside, and my next target is the highest point of 2018, and that's roughly around the 76.90 zone. Bitcoin, very quickly on this one. Bitcoin is, well, it's trying to do something here. During the weekend, it kind of was flat here, but yesterday the commodities sold off, and it drifted lower. It fell below this this 33,333 territory, the one that I spoke about previously, and as you can see, it continues to trade below it. So I would say that this arrow needs to go this way here. Let me just adjust it very quickly. So basically I would say that as long as it stays up below the 33,333 territory, then, well, I mean, it still could move towards the downside here, and my next target is the psychological 30,000 mark. Now, if it climbs back above this area, what I'm going to be looking at here is I'm going to keep an eye on this little downside resistance line right here, taken from the high of the 15th of June, and in a way, if it breaks above this downside line and pushes above the 34,635 territory, then, well, I mean, higher levels could be met, guys, and we could see that. Oh, nope. Let me grab that arrow very quickly. So we could see that commodity drifting back down again. So if it continues to trade below this 33,333 territory and below this downside line, of course, then yes, another slide towards that psychological 30,000 mark could be possible. Now, Ripple also declined yesterday, sold off nicely, and tested the upside line, the one that I talked about previously, guys. So this one's taken from the low of the 29th of December of 2020. As you can see, the upside line did its job, and it provided a good hold up. So now the big question here is, can it continue to provide support? Well, that's of course a question for time, and of course for the bulls. For now, I mean, the only thing we can do here is keep an eye on this one, and basically the idea that I talked about in the beginning of last week worked out nicely, that if we drop below the 0.7910 zone and stay below it, then yes, we could see a move towards this upside line, which worked out perfectly, so that's a great result. Now let's see if this upside line continues to provide support. This upside line is taken from the low of the 29th of December of 2020, as I said, and of course we'll keep an eye on the current low of today near the 0.5722. If that gets cleared, then of course, yes, this will confirm a forthcoming lower low, and, well, I mean, further declines could be possible here. We could start aiming somewhere for these areas like the 0.3616. In terms of the upside, now, of course, the further we go to the right, kind of and to the downside, then we kind of shift our potential breakout area for the upside lower. So here, for example, right now, I would say that I'm going to look at this previous support zone, which did do its job, and now I'm going to look at it as a nice area of resistance. At the same time, if we push above this barrier, then yes, we could push above this downside line, above the 200-day EMA, and potentially, yep, more buyers could join in. So that's the kind of game plan right now. I would say it's a difficult one because we are resting near this upside line here, on this upside line, but it's not really looking that positive yet. So for now, keep your eyes on these two areas. AUDJPY very quickly. So yep, a nice reversal here back up. So risk on environment picked up yesterday. We saw the equities rising, and that's where AUDJPY rose as well. So this pair, of course, as you know, is a very good indicator of risk on, risk off trading. But here the only little issue for me is that it's still trading below this 100-day EMA shown as the green line. So basically, in other words, a decline is still possible here, a good decline, and I would say like this, that as long as it stays below that 100-day EMA, then, well, I'm going to aim for that 200-day EMA, and then we'll take it from there. For now, for the upside, well, it's a little tricky one as well, because ideally I would like to see wait for a push above push back above the let me just bear with me one moment, guys. A push back above the 83.93 territory right here, which previously I looked at as a support. Now it could take the role of resistance. However, I understand that there's not a lot of room here then for the upside. So basically, this is where it automatically kind of rolls into the fact to wait for a break of this downside line. But I understand that maybe we could be missing out on a bit of territory here. So that in that case, what we could do here is maybe keep an eye on this 100-day EMA together with the 83.25 zone right here. If we climb above it, then yes, we will aim for slightly higher levels, but then we'll still be very careful because it could still reverse anywhere here, maybe even near the 21-day EMA. It might not even travel towards the downside line here, and then yes, another slide could be possible. So that's why with the upside, guys, be very careful for now. NZDCAD. So I talked about this pair last week, and I said to keep an eye on this 0.8635 territory, which continues to provide support. We had those false breakouts, but yep, it still remained above it. Above the pair remained above this hurdle. Today we're seeing the pair trading fractionally below that, so there is a good indication maybe that we could see a further decline. But especially if oil continues to rise, then yep, expect NZDCAD to drift maybe further south. And my next target is the 0.8577 territory right here, marked by the lowest point of August of 2020. But that's, like I said, if the pair continues to trade below the 0.8635. If it climbs back above it, I'll keep an eye on the 21-day EMA, and if it pushes through this, then I'll go for a bit of a larger correction to the upside. USDCAD here drifted to the downside yesterday, of course, and yep, we saw this downside line acting as a good. This downside line is taken from the high of the 19th of March, and this downside line did act as a good area of support. So as I mentioned previously, that I'm going to keep that on the chart because it might end up being a nice trampoline here. The only little issue here is that we are trading back below the 100-day EMA, which causes a few concerns here. And yep, for now I would say be very careful here, be very cautious, and yes, so if it continues to trade above this downside line, there's still a chance for maybe something like this happening here, where another push higher could be possible. However, if it drifts back below this downside line, then well, maybe we're back to examining slightly lower areas. GBPUSD very quickly on this one, still watching this barrier. Still, it's struggling to stay above it. Maybe today, maybe, I don't know who. Let's see what's gonna happen here. But again, this is just amazing how this barrier is providing good resistance, and we need that daily candle to stay above it, and so far we're not really getting that. So this 1.2790 territory, that's what I'm keeping an eye on, and if eventually we do get that strong move above it and we stay above this barrier, then yes, I will aim for some higher levels. GBPUSD, so of course the weaker dollar helped the pair rebound here from this area, this 1.38 zone, and yep, we've climbed back above this upside line, taken from the low the 24th of September. Actually, let me just adjust this a little bit like this. So no, wait just a second then. Let's see if this is actually capturing it. No, it's a little bit off. So that's where it's interesting then in that case. I mean, we are then still below this upside line. So yep, okay, this is becoming a little bit more interesting, I would say. So actually, let me just adjust this now. Okay, now this is because it was off here. That's why it wasn't capturing this. Okay, so this is where a tentative line can cause a lot of confusion. Basically, this upside line is a tentative one because, first of all, we only have 2 touches here, despite these, because these were a break actually, not more of a touch. So so we broke this upside line taken from the low the 25th of September. We have then reversed back up, and we climbed back above this upside line, and we're currently sitting above the 100-day EMA as well. So there is a bit of positivity here in this pair, and I would say like this, that as long as it stays above that 100-day EMA shown as the green line, then yes, we could aim for the upside again, guys. So that's why for now, let's be very careful here. If it, like I said, if it continues to trade above this area, then there could be a push higher. But if it falls below the 1.38 territory right here, then yes, we could see maybe a possible correction here, a larger correction to the downside, where we could aim for this upside, another upside support line, another tentative one, taken from the low the 18th of May of 2020. And finally, EURUSD, guys. So with this one, it's also a bit of a tricky one here. So basically, we're still trading below the 200-day EMA here, shown as the black line. So in a way, we managed to reverse nicely here to the upside yesterday. We're currently trading above this 1.1892 zone. I looked previously at this level as a good support. Then it got broken. Now somehow it is acting again as a good area of support. So let's see if it can continue doing that. If it can, then yep, like I said, we could see a push back towards this 200-day EMA together with the 1.1943 territory. And then yes, we'll of course take it from there. If we draw some Fibonacci's here very quickly, let me just grab the where's that Fibonacci, guys? It's probably going to be here. There we go. So Fibonacci, if we take it from this high here and draw it down until this low, you can see that we have managed to retrace the 23.6% perfectly here. I mean, we could see a push higher here. The 200-day EMA is just kind of roughly in between the 23.6 and the 38.2% retracement on the Fibonacci. The 32.8 is around the 1.1962 mark. So basically what could happen here is we could see a push higher, an overshoot of the 200-day EMA. It tested the 38.2% retracement on the Fibonacci, and then we could see maybe the daily candle ending up back below this 200-day EMA. So we have seen something like this happening before. So again, let's see if that's going to play out. But if you're a little bit on the cautious side, then what you can do here is keep your eyes on the last week's low near the 1.1847 territory. A nice good drop below it. Yep, would confirm a forthcoming lower low. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys, joining in here. So thank you very much for watching this one till the end. If you want to catch me tomorrow morning, as always, in my Trader's Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day, stay safe, and I'll see you later. Bye-bye.